Welcome to Gold Talk Show, your spot for, well, everything gold.
That's right.
Whether you're a seasoned investor or maybe just gold curious, we're here to dig into it all.
And bring you the insights you need.
Absolutely. Now, you've probably seen the headlines recently. Gold prices have been, well, quite the
Oh,
topic.
definitely. A real roller coaster. We saw it hit that record high and then almost immediately a pretty significant drop.
Exactly. So today, that's what we're unpacking. We're going deep on why gold hit those historic numbers, what triggered that sudden downturn, and maybe answer that big question. Is now the right time, especially for folks here in the US, to consider buying?
Mm-hmm. We've been looking at some recent analysis on these very movements, trying to piece together what led to the peak in the fall.
Right.
And our mission really is to pull out the key takeaways for you, help you make sense of these shifts, maybe see potential opportunities without getting bogged down in, all the jargon.
Okay, sounds good. So let's start with the high point, that historic peak. Gold climbed, what, over 30% since early 2024?
That's right, over 30%. It eventually hit a record, 3,499.9 USD an ounce, around mid-April 2025. Just incredible.
Wow, what was fueling that kind of surge?
Well, it was kind of a perfect storm of factors. A big one was geopolitical
Yeah.
instability, all the things going
Like
on.
the Middle East conflicts, Russia, Ukraine.
Exactly. Those tensions, plus the ongoing worries about the U.S.-China trade relationship. In times like these, historically, investors get nervous.
And they look for safety, gold being the classic safe haven.
Precisely. And we saw that play out directly. Remember when the U.S. announced those tariffs back in May 2025?
Yeah, the analysis highlighted that there was a jump then.
A significant one. The price shot up from around $3,180 to $3,360 pretty much overnight. It shows how sensitive the market was to that kind of news.
Okay, so geopolitics definitely played a part. What else?
Central banks were big buyers, especially the People's Bank of China.
Really?
Yeah, mid-April 2025, they reportedly bought 92 tons. That's a massive purchase.
92 tons. Wow, so it wasn't just individual investors feeling jittery.
Not at all. Central banks do this to diversify their reserves, move away perhaps from holding too many U.S. dollars. China's move really emphasized that trend.
And speaking of the dollar, it was weakening around then too, wasn't it?
It was. The U.S. dollar index, the DXY, it fell to a three-year low, around 99.49, right in mid-April.
And a weaker dollar generally helps gold.
Generally, yes. Since gold is priced in dollars, a weaker dollar makes it cheaper for buyers using other currencies, which tends to boost demand.
Okay. And then there's always the inflation question lingering in the background.
Always. Even with the Fed hinting it might keep interest rates high, there are still underlying fears about global inflation.
Uh-huh.
And gold, is traditionally seen as that hedge against inflation, a way to protect purchasing power, so that fear provided support.
It feels like market sentiment itself just added fuel to the fire too.
Absolutely. Sentiment was very bullish. Kitco ran a survey mid-April. Something like 63% of experts were predicting prices would go even higher.
So a bit of a self-fulfilling prophecy. Everyone expects it to rise, so they buy, and it rises.
Kind of, yeah. That optimism definitely feeds into the buying pressure.
Okay, so that explains the incredible climb. But then, boom, April 23rd, 2025, a sharp drop. $108 an ounce, wasn't it? Back down to around $3,300.
Yeah, a very sudden reversal after hitting that peak.
What caused the floor to drop out like that?
Again, a few things happening at once. First,
Yeah.
good old-fashioned profit-taking.
Makes sense. It hits a record. People who bought low decide it's time to sell.
Exactly. You saw a real spike in selling volume around April 22nd, especially from larger investment funds locking in those gains. It's a classic market cycle.
The analysis mentions something similar happened back in 2011.
It did. Gold peaked then around $1,930, and it was followed by a pretty hefty correction, largely due to profit-taking as well. History often rhymes.
So profit taking was one factor.
Yeah.
What else?
The U.S. dollar showed a little bit of strength again. Remember, it hit that low of 99.49.
Right.
Well, on April 22nd, it ticked back up slightly, maybe to around 100.2. It seemed linked to some positive U.S. economic data, like fewer unemployment claims than expected.
And the dollar-gold relationship is usually inverse, so a slightly stronger dollar.
Puts downward pressure on gold, exactly. Makes it a bit more expensive for those international buyers.
Okay. And what about the Fed? Interest rates are always a big one for gold.
They are. Around mid-April, Fed Chair Powell made some comments. He acknowledged inflation risks from potential tariffs, but also noted the labor market was strong, maybe reducing recession risks.
So mixed signals?
A bit. But the market seemed to interpret it as maybe the Fed wouldn't need to cut rates as aggressively as previously thought. There was talk they might only do a 25 basis point cut in November, after doing 50 back in September 2024. Some even worried about potential hikes down the line.
And higher interest rates make gold less attractive.
Right. Because gold doesn't pay interest. So if bonds or savings accounts start offering better yields, the opportunity cost of holding gold goes up. Why hold a non-yielding asset if you can earn interest elsewhere? That definitely weighed on the price.
Got it. Any other major factors in that drop?
Well, there were whispers about trade policy again. Some signs of negotiations between the U.S. and others, maybe China, maybe the EU, possibly aimed at lowering tariffs.
Ah, so less fear of a full-blown trade war.
Potentially. And if that risk perception goes down, the demand for gold as a safe haven also tends to ease off a bit.
Makes sense. Less fear, less need for safety.
And finally, you can't ignore the technical side. Gold really bumped its head against that $3,500 level. It acted as strong resistance.
Like a ceiling it couldn't break through.
Exactly. And when an asset tries and fails to break a key level like that, it often triggers selling. People who bet on a breakout get disappointed. Stop-loss orders might get hit. Market psychology shifted pretty fast. The Kitco survey the following week showed only 25% expecting further increases. A big change.
Okay, that covers the drop. Now here's where it gets really interesting, especially for our U.S. listeners. The analysis points out this weird divergence. Global prices fell, but U.S. gold prices kept rising.
Yes, that's a fascinating wrinkle and highlights the unique dynamics here in the U.S. market. On that same day, April 23rd, when global prices were retreating, the price of certain types of gold here, like SJC gold bars, actually hit new record highs. We saw figures like $124 million per tael.
Per tail, that's a specific unit, right? And $124 million sounds incredibly high.
It is a specific unit used in some markets, and yes, the price was extremely high. Gold rings were also trading very high, around $115 to $117 million per tael. This created a huge gap compared to the converted global price.
A gap of what, $15, $17 million per tail? That's enormous. Why such a difference? What's going on specifically in the U.S. market?
A key reason seems to be limited domestic supply, particularly of those SJC bars. The analysis mentions Decree 24/2012, which apparently restricted gold imports quite some time ago.
So getting gold into the U.S. is difficult.
For certain types, or perhaps through official channels, yes. It means the supply relies heavily on domestic production and whatever the state bank, presumably the U.S. Central Bank in this context, auctions off. And that supply just hasn't kept pace with demand.
And demand here is high.
Very high. There's a strong cultural preference for gold as a safe investment, a way to store wealth, especially with those inflation concerns we talked about.
So basic supply and demand, but skewed by import restrictions.
That seems to be the core of it. Plus, you had that market psychology factor again. When global prices were peaking, it likely triggered a rush here. People worried about inflation, maybe currency issues, saw gold rising and jumped in, especially for things like gold rings.
Creating its own upward price cycle locally.
Exactly. And one other factor in the U.S. market mentioned is the buy-sells spread the difference between the price dealers buy gold for and the price they sell it for. Apparently, that spread can be quite wide here, maybe up to $3 million per tael, which is higher than you'd typically see internationally. That adds another layer of risk for individual investors trying to buy and sell.
Okay, so with this backdrop, global prices pulling back, but U.S. prices staying stubbornly high due to these local factors, the million-dollar question, or maybe the $124 million per tail question is now a good time for someone in the U.S. to buy gold?
Well, based on the analysis from late April 2025, the short-term advice is definitely leaning towards caution.
Caution, okay, why?
Because the global price might still have further to fall. There could be more profit-taking, the dollar might stay relatively firm, said policy is still uncertain. Experts were predicting a possible dip towards the 3,250 per ounce range globally before finding solid ground.
And jumping in now, especially with those high U.S. prices and wide spreads.
It looks risky for a short-term play. You could easily buy high and then see both the global price and the U.S. premium potentially decrease. The analysis also notes a historical pattern. After gold peaks, there's often a correction period lasting maybe 4 to 6 weeks. We saw that in 2016, for instance.
So the suggestion is maybe wait and see.
Yeah, wait for clearer signals. Wait for the global price to stabilize, perhaps find support around that $3,200, $3,250 level, or wait for the U.S. domestic price to narrow that huge gap with the global price, maybe come down closer to, say, $110, $115 million per tael for those bars, which would be more aligned.
Okay, that's the short-term view. What about the long-term outlook? Does gold still look attractive over, say, the rest of the year or beyond?
The long-term case still seems pretty solid, according to the analysis. The fundamental drivers haven't really gone away.
You mean the geopolitics, inflation fears, central bank buying?
Exactly. Those factors are likely to persist. Geopolitical instability isn't vanishing overnight. Global inflation remains a concern. Central banks are expected to continue diversifying. Some analysts, like JP Morgan mentioned in the source, were even forecasting gold could reach $4,000 an ounce by the end of 2025, especially if recession risks increase or those U.S.-China trade tensions drag on.
4,000.
Wow. It's a forecast, of course, but it shows the underlying bullishness. Plus, you have other central banks in Europe, Australia, Canada potentially cutting interest rates later in the year, which is typically good for gold. So for wealth preservation against inflation and currency fluctuations here in the U.S., gold still has appeal.
So long term, it's still a maybe, but timing is key.
Timing is crucial. You don't want to buy at the absolute peak, especially with the inflated prices we've seen domestically. A sensible strategy for long-term investors is often diversification. Don't put all your eggs in one basket. And maybe consider buying gold gradually, perhaps during these price corrections when it pulls back towards technical support levels.
Right. What are the main risks people should be aware of right now, specifically in the U.S. market?
Well, the big risk globally is if the Fed gets more aggressive with interest rates than expected. That could really hurt gold prices.
Okay.
And domestically, that high buy-sell spread and the limited supply issue are significant risks. If the market sentiment here shifts, or if supply somehow increases, those high domestic prices could fall fast, leading to losses even if the global price holds steady.
And the risk of just getting caught up in the excitement, herd mentality?
Definitely. Seeing record high prices can create FOMO, fear of missing out, and lead people to buy without thinking it through, especially when U.S. prices are so detached from global reality.
So the overall recommendation from this analysis as of late April 2025.
For short-term buying in the U.S., probably not the ideal moment. Wait for things to settle, wait for global prices to stabilize perhaps in that $3,200 to $3,250 range, and hopefully see U.S. prices become less disconnected.
Maybe closer to $110, $115 million per tail for bars, as you said.
Right, something more reasonable relative to the world price. For long-term investors, gold remains a potentially valuable asset, but it absolutely needs to be part of a balanced, diversified portfolio, maybe 10–15% max, to manage the inherent risks.
Okay. So wrapping up this deep dive then, it's clear this recent gold market roller coaster wasn't simple. It was this complex mix of geopolitics, economics, central bank actions, investor psychology.
Whole lot of moving parts.
And that divergence between U.S. and global prices really throws a spotlight on the specific quirks and pressures within the U.S. market right now.
Absolutely. The supply constraints and local demand created a very different picture here for a while.
So for you, our listeners in the U.S. considering gold, the message seems to be short term, be cautious, maybe wait for calmer waters. Long term, it still has potential, but think diversification and smart entry points.
Well summarized. It's about being informed and patient.
Definitely. You know, the forces influencing gold are always shifting. It makes you wonder, what other global themes or economic signs do you think will be most crucial to watch in the coming months? What's the next big thing that could move the needle for gold?
That's the key question, isn't it? Something to keep thinking about.
It is. Well, if you found this deep dive valuable, if it helped you make a bit more sense of the gold market, please do give us a like, maybe share it with others who might find it useful.
And definitely subscribe to Gold Talk Show. We'll keep bringing you the latest updates and analysis on everything happening in the world of gold.
We will indeed. Stay informed, stay ahead. Thanks so much for tuning in today.